Hey, welcome back. Matt here with 10-minute or less business, reporting live from the Definitely Real office. So we're going to finish off the left side of the canvas now with the cost structure section. This is the final boss, if you will, of the business model canvas. Up until now, it was all fun and games. You got to talk about your really cool customers that you're going to provide services for. You got to talk about the value propositions that you're going to provide. You got to talk about your marketing campaigns. You got to talk about your levels of quality and the relationships you're going to build with your customers. You get to talk about how much you're going to charge them, right? How you're going to make all this money. Then you got to talk about all the cool things you're going to get to buy for your business. So you're going to have fancy computers, so you can have your own office space, all very exciting stuff. But this is the final boss. How much does all this cost? How much does it cost to run the business that you planned out? Very, very important stuff. So what I would do with this one, and I think I've said it before, I'll say it again, I'm not an accountant. So what I'm going to say here is it's a rough estimate of financial projections and cost structures, but I think the points are still relevant. So what you would have to do this, assuming you've done a good exhaustive job of going through your key activities and key resources section in the previous couple of videos, you need to figure out how much every single one of those things will cost you. Is it a one-time purchase, like buying manufacturing equipment? If it is, how are you going to pay for it? You're probably going to finance it over 10 years, something like that. What do those payments look like? Are you going to go out and buy a bunch of office furniture? How much is it going to cost to have the fancy iMac at the front desk that you want? Do you want a company car? What's that going to cost? All of this sort of stuff would go into your cost structure because it has to get paid for, right? Depending on the business model that you're doing, you could do a cost of goods sold plus a non-variable cost model where you take all your fixed expenses and then you go a cost of goods sold model based on how much or how many units you expect to sell. There's different ways to do this, but the important part is to figure out how much is it going to cost to start your business. Because what you're looking at here eventually is you're going to look for a break-even point. So what I did with our tech toy example is I went back, I pulled some general categories from our activities list just to make a point. I didn't go through and do an exhaustive one. I just wanted to demonstrate how I would do this in a business model canvas capacity. So some of the important ones that you would have to look at would be your office lease. I'm just making up numbers for this. Office lease, your manufacturing facility lease, your equipment payments, your company vehicle lease costs, your tech and software licenses. Your staffing cost is often an enormous driver of the overall cost of your business. And one thing too, I don't have here, but you want to make sure that, especially with a startup, you're identifying a model where you can pay yourself. I see a lot of businesses come through that basically subsidize a failing business with their free labor and don't ever take any money in payment. And they hope it gets better, but sometimes the model is just broken. So I encourage people to include their own management salaries, or at least paying themselves as an employee, whatever, in the model somewhere so that it's accounted for right from the get-go, so that even if you don't take that money early on, you know that it's available in the business for you to make sure that it's sustainable. And then at the bottom here, we just have a rough total of $1.21 million a year. I left out a lot of costs for this business model just to prove a point, or sorry, not to prove a point, just to make it easier to explain how the cost structure goes. But this is generally how I would do it with the cost structure section. So what I'm going to do in the next part is do a quick check between the cost structure and the revenue streams that we talked about, just to see if it works. Because what you want to check before you spend all this money on launching a business is, does the model break even, or will it break even in 5 years' time? Is there potential there for you to earn a significant amount of revenue or income off of the business? Because if not, then you're basically paying a bunch of money to pursue a hobby or a passion, which is also fine. Nothing wrong with that. But you want to know going in if that's the scenario you're going to be running into. So catch me for that one on the next video about matching cost structure and revenue streams.